All right, jobs might have slowed down in this country in the latest read here, but if that's an excuse for the Federal Reserve to put off tapering, then the Fed's James Bullard, the St. Louis Fed head, was saying it shouldn't be, that the sooner the better. I'm just sort of paraphrasing all of that. We've got Kenny Polcari with us right now, the Slate Stone Wealth chief market strategist. I'm sorry, Kenny, I was just looking for the details of the Mr. Bullard's remarks. I think what he was saying is we shouldn't use some of the bumpy data as an excuse to push off the Federal Reserve scaling back, purchases of Treasury notes and bonds. What do you think of that? Because most in the market seem to have anticipated that is exactly what's happened. It's been pushed back.
Right, and I think it has been pushed back, but I think Jimmy Bullard's right. I think we have to stop kicking that can down the road, and at some point we've got to act like big boys, and you got to start to pull the taper back. The market's going to end up doing what it's going to end up doing. We see weakness in the market today. We saw it again yesterday on those concerns that maybe Jimmy Bullard is right. In fact, Rafi Bostic came out the other day and said, in contrast, he said that they're going to let the economy run. He didn't define they're going to let it run hot or cold. He just said they're going to let it run. Now, Mary Daly from San Fran, she's going to come out later on this week, and she's kind of on the fence as well. But remember, Jimmy Bullard is a non-voting member, so he can say what he wants, and the market will react to him, but he doesn't have a vote. And I think that's actually a mistake, because I do agree with him. We need to start to pull back.
Ken, it's interesting, too. I'm just wondering what you would look for once it happens. It's going to happen soon. I don't know when, but once it happens, do you look at the degree the tapering goes? I think they buy, in the vicinity of $120 billion worth of such securities every month. Do you look if it was $10 billion less? Do you look if it's dramatically cut? Do you look for signals that they're going to increase that slow purchasing as the months ensue? What do you look at?
So I think you have to, and I'd like to see it unfold this way, that they start slowly and they watch. I think if they just take it, $120 billion, and they divide it by 10 months and they say, we're going to do this much every month no matter what, I think that's probably the worst scenario, right? I think they should start slow, see how the market digests it, see how investors digest it, see what happens to the economic data, and then they can adjust as they go along. Look, it does have to happen. Everyone knows it's going to happen, but it's going to be at the pace at which it happens, I think, is going to be the defining factor in what the reaction is in the market.
I agree with you that this has been going on way too long, and I understand why and how it started. But when people get used to that, and they've had for the better part of a decade, they don't like it being taken away. But it's for their own good, right? I sound like the father of a teenager, don't I? Oh, I am the father of a teenager. You know what I mean? So taking it away, right, is a tough reality, but it is a reality.
It is a reality, and you're right? At some point, my fear is that it's gone on way too long, so it's going to be more painful as we take it away, right? And the more if they kick this can down the road into 2022 instead of starting this in November of 2021, the way I think the market thought after Jackson Hole, then I think it just becomes more painful again, because everyone goes, oh, the Fed's not going anywhere. Buy stocks, and they take it up again. And then when they start to take it away, then that move down, and you and I both know how swift it can happen, that change in market psyche. And with the automation today, you could see Dow down 1,000 points before you even blink your eyes. And so I think you might have that kind of visceral reaction the more they push out. They've got to, like I said, they've got to act like a big boy and say, listen, sorry, we're going to start to take this jar away, and you guys are going to have to just figure it out. Right? And the market will do what it's going to do. Ultimately, it will find stability in a sense of itself. But until then, you can't keep feeding the beast.
Very well put. What about raising rates? That would be the next step. When do you think that comes?
Yeah. I'm not so worried about raising rates happening anytime soon. I think Jay Powell's right when he talks about that narrative that, they are mutually exclusive. One doesn't necessarily trigger the other. And I think the raising rates would have to come after we get through the tapering. We see what's happened to the market. We see what's happened to the economy. And then they can start about raising rates. But look, we've got a whole Neil, and you and I know this, nearly a whole generation of people and investors and finance people that have only known zero rates, Fed stimulus, more cookies in the cookie jar, and they don't know how to react when all of a sudden that gets taken away. And I think that's also part of the fear, because on a certain level, there's a lot of inexperience with people understanding when you try to normalize, when you try to go back to 3 or 4% interest rates, God forbid, right? I mean, they're all talking about talking about mortgage rates going from 2 3/4 to 3%. Oh my God, they're so expensive, dude. Try buying a house at 15% the way it was when you and I were 25 years old first buying a house.
Right? You are
They
exactly right,
nuts, right?
Kenny. And now I'm going to remind people of that story that my wife and I paid over 13% for our first mortgage. But why should I repeat a story?
I paid 15.5% for my first mortgage, $196,000 in Tarrytown, New York.
I hear you, my friend. You tell kids that today, they don't listen. We sound like two angry old men, but you're not old. I know I am.
Well,
but Kenny, thank you very much.
I'm not angry.
Great job, my friend. Great job.